Hello and welcome back to How About That Crypto. I am your host, Bitcoin Stylist on Twitter and Bitcoin Hairstylist on Instagram. Today, I'm talking with Kemal Kurtulus, local tax accountant from Northern Virginia, and we're going to talk about crypto and see where this goes. This is going to be great. You definitely want to check it in. And if you like the content, you don't like the content, please leave a comment below. If you got any questions, please do that. And so what's up, Kemal? How are you doing today?
Doing well. I'm doing fine. How about yourself?
Pretty good, pretty good. I had a pretty good day at work, and so for those of you that don't know, so Kemal does the taxes for the account is the salon that I work at in Georgetown. So that's how we know each other, and we've had some little conversations about crypto. So what is your experience with crypto?
Absolutely zero.
Okay.
But in terms of trading and in terms of sort of, the mechanics as far as what's being traded and all the platforms, I have no experience with that. What I do have experience is the tax implications that surround this. And for the first time over several dozen years, we're starting to see a lot of 1095s come in, 1099Bs rather, which is the disclosures that now these exchanges are now giving to the taxpayers. So in that sense, a lot of experience on that.
Okay, cool. Yeah, I got mine, and it's a much bigger number than I was expecting. So I'm got caught a little off guard by my gains this year.
Has your jaw dropped?
Yeah, my jaw dropped. I tried to, I use a software. I paid for a software that pulls the API, like taps into the API and gets a read only. And it does all the trades for me across multiple wallets. I got like 6 wallets, and I use like 4 or 5 exchanges and 3 wallets. And so I kind of uploaded them all into it. And I messed around with the high HIFO, the FIFO, the LIFO, like all the different accounting measures. I tried figuring out which is the lowest number, and it's much higher than I was expecting.
One thing as a tax preparer that I'm actually seeing a lot of folks do is they'll actually buy a particular security. Well, they're not really secure. Well, technically they're securities in one sense, but they're assets. They buy these crypto assets. They sell them for a big gain. So for instance, let's say if you have let's say $25,000 gain during the year, and sometime during that year, you take that $25,000 gain and then you reinvest it in another security, another asset, crypto asset. And then at the end of the year, I've had people say, well, why do I have to pay that $25,000 when meanwhile the price of Bitcoin and all these other crypto assets have come down? So it's a simple issue. It's a very simple issue, but it's an issue that I think we should probably clarify. Once you sell an asset, if you have a gain on that asset, it's taxable. Whether that asset goes up, whether that asset comes down at the end of the year is really immaterial.
So what do you think, like, so when I got into trading, I had no intention of trading, to be honest with you. I just got in kind of early, and that number went up like crazy, and then I got a little nervous, and so I sold it to take my gains, and I sold it right near the top and last spring, and then it crashed, and I was like, sweet, I'm like an oracle, so I start buying in at 30, and it just keeps going up and up and up, and I'm like, boom, another oracle, like I'm the champ. But then it crashed like 40 to 50%, and but I still sold it. So I had all those gains, I sold it, and then I put it back in, and I got back up, and then it came back down. And so yeah, I'm one of those people where I'm not sitting on those gains in value in my portfolio valuation. So, but like, I wasn't really prepared for that. And so what do you have any like advice for how people can like, kind of be a little more prepared, not get caught off guard?
I do, but I don't think a lot of folks would actually execute it because just the temptation of gain, it just creates so much excitement that, you know, that discipline is sort of lost. And the short answer is the estimated taxes.
Yeah.
You know, estimated taxes where, okay, if I made a gain on a particular asset, I want to be able to sleep at the end of the year. I want to be able to sleep during the year. I want to have no taxes that I'm worrying about at the end of the year. So one of the things that immediate things that people can actually do is the estimated tax. You know, the IRS has a website on there. It says if you want to make estimated tax payments, and these are just projections. And usually the rule that I usually go by is maybe a 15% is usually a good start of your gain. If you have $100 gain, then just put aside $15 and then just make that tax and just put that tax in. So
That's good.
but that's only the federal side. There's also the state side to that too. So the state also has an estimated tax as well.
Okay. And is there like do you have like a ballpark figure for that? Oh, and by the way, like I don't give out investment or financial or tax advice. You are a licensed professional, so I don't know if you want to make a disclaimer before you give any more information.
Yeah, again, it's very, if I'm not if we don't have a client relationship, yeah, there's always that disclosure. But I would also add that the IRS, very interestingly enough, and we can probably share this link on at the bottom of the screen here.
Okay.
Actually, a section in what is called an internal revenue manual. Now, this internal revenue manual is probably something like that thick. And the IRS says, yeah, we publish a lot of documents, we publish a lot of information, we interpret sort of regulations, we interpret what the law is saying. We come up with these publications, we try to give you the best information as possible, but you can't rely upon that publication, is what they say.
Yeah.
Which is very weird. Like, if I can't rely upon what the government is saying, whom can I rely upon? And, you know,
so let's just say that if you guys want actual advice, this is for entertainment and purposes, but if you want actual advice, we'll leave a contact information to Kemal, so we'll leave that in the description below, as well as the stuff he's just talking about. Now that that's out of the way, what would you say is a good ballpark for someone to like estimate? Like, you said 15% for federal.
Yeah, I mean, that's usually the average. I mean, as you know, we have a progressive tax system. The more money you make, the higher the tax rate you're going to be paying. So it depends upon the totality of the circumstances. It depends on what your income is. Income, your tax bracket. Those are elements that one needs to consider.
Right. Okay. So set aside some money for each trade, and that'll make the IRS bill at the end of the year. It'll make it so much less painful. Even if you got to pay a little bit above that number, depending on your tax bracket, at least you'll have that money set aside, right?
And yeah, and one other thing is the IRS is not going to cheat you out of that money. In other words, if you deposit, let's say, the 15%, and it turns out that when you reconcile at the end of the year your tax return, or when your tax preparer does that for you, and it turns out that you're actually owed money because you paid too much in taxes, the IRS will, you know, they'll refund that money for you.
Okay. So check this out. I got a question that I feel like is on the minds of a lot of people, and they may feel like they know the answer, but I want to put it to you, the professional. So have you heard of this NFT trading stuff?
Very limited. Yes, I have.
So basically people are trading basically receipts, like for various digital assets that are non-fungible. So it's like a piece of artwork, a song, or a video, and so they're trading them, they're buying them, they're selling them. So my question to you is, oh, and in order to buy and sell these things, the person has to buy a crypto. So like most of them are built on the Ethereum blockchain, so you can only buy and sell them with Ethereum. So you have to go onto Coinbase or Voyager, and you have to link your bank account, give them all your IDs, just like you would with any financial institution, and then deposit from your bank account into the exchange, the Coinbase or crypto.com. And then from there, then you can buy Ethereum. So let's say I buy Ethereum at $2,000 and I buy one Ethereum, and I want to go buy an NFT, and it's priced at one Ethereum. So I'm like, perfect. Let's just ignore the fees. Well, actually, maybe we shouldn't. Let's just say I buy Ethereum for 2,000. And then I turn around and I buy an NFT for one Ethereum. So I went from dollars to one ETH, and then I purchased another asset with the same one ETH. But at the time of purchase, ETH was worth $2,500.
But your buy was 2,000, was what you said.
So I bought
correct?
ETH at 2,000, and then I turned around and I used that ETH to buy something else that was priced in ETH.
Right. Like I've heard of folks, and I don't know how true this is, but they buy an asset, a crypto asset, for an X amount of dollars, and that asset now has appreciated to, let's say, X plus 500. So what they do is they take that asset and they purchase a Tesla, for instance, or some other asset. There are actually people that are actually buying cars with cryptocurrencies. In a sense, that way you're technically triggered a gain on that, because what you're doing is you're taking something that's a crypto asset and you're exchanging it for some sort of a property for a gain.
Right.
So it's sort of like saying you have something and then you cash it out and then you buy it again. It doesn't change anything.
Yeah, that's how I understood it too. Yeah.
Yeah. I mean,
so go ahead.
There's only one way of not paying taxes when you sell something, and that's in real estate. There's something called 1031 exchanges, where you buy an asset and then you sell it for a gain, and you pay no tax on that gain, provided that you have the 1031 exchange rules. That's the only thing I can think of where you don't pay any tax at all.
What is this 1031 exchange? I want to know how to not pay taxes.
So in 1031 is what is called it's actually named after Section 1031 of the Internal Revenue Code. And pretty much it used to apply to assets too. For instance, if I bought this phone, let's say for $1,000, and I sell this phone to you for $1,500, I have that gain. It used to be in that sense, technically what I have to do is I have to report that. In the old days, under this Section 1031 rule, the $500 gain that I had would be used for me to purchase another iPhone. So if I were to have a like-kind exchange of an asset, that means I don't pay a tax on it.
Interesting.
That was under the old rule. So let's repeat one more time.
Okay.
I have an iPhone. I sell the iPhone. I have a gain for $500. Then I take the 500 and purchase another iPhone, not a television, not a car or anything like that, but another iPhone of like exchange. I pay no tax on it. But if I decide to finally sell the second iPhone, that's when I would actually get that gain. That rule changed with the Tax Cuts and Jobs Act under the Trump administration. Now it only applies to real estate.
Okay.
Yeah, so I take this real estate, let's say I purchase it for $1 million. I sell the real estate 2 years later after I pretty it up, and let's say 1 million, 1.5 million, I have a $500,000 gain. Now the tax code says a like-kind exchange would defer that tax, so you pay zero tax on that money.
Interesting. So you could essentially continuously roll up your money. Is like, how like-kind does it have to be?
It has to be, well, the way the statutory scheme is constructed under Section 1031, it's pretty liberal. you can buy rental property and exchange it for a remodeled or a commercial property or
Gotcha.
residential. It's fairly liberal in that sense.
Wow.
Beauty of it is, you know, you buy something, you sell it, you have a gain. You take that gain and you roll it into the next property. Now, let's say on that third property, you decide to cash out, then it rolls back over to that first gain as well.
Wow.
Yes.
So basically never sell property and continuously roll it up and take loans out against your property to get the cash out of it.
Pretty much, pretty much. And also there's this generation skip tax issue where, let's say 50 years down the line, you want to sell it to your children. There's actually a mechanism in the code where if you get your children involved somehow, you can, or your grandchildren involved, you could still. Yeah.
Oh my gosh. Okay. Well, I know this doesn't have anything to do with crypto, but I'm sure people are pretty excited to hear about that. Oh my gosh. So that's literally like,
Imagine if they had something like that for cryptocurrencies.
yeah, I can totally imagine. Oh my gosh. All right. Well, so we got basically understanding what a taxable event is it doesn't matter if you're selling crypto for another crypto or crypto for an NFT or crypto for a real world asset, but every time there's an exchange of from one asset to another, that's a taxable event at fair market value, whatever the price is at the time of exchange. So if you buy ETH at $2,000 and then you buy so now you have one ETH and then you take that one ETH and you buy an NFT. It doesn't seem like there's a taxable event, but there is. If the value of ETH went up when you purchased that NFT, then you owe taxes on that no matter what happens to the value of the NFT. Did I get that right?
That sounds accurate. Yes.
Okay, cool. Yeah. So everybody, you definitely, if you're trading NFTs out there, just know that trading that has multiple implications because you're not trading for dollars, you're trading for ETH. So you have to calculate the underlying value of ETH every time you're moving in and out. So it's like moving out of a different currency, but you have to calculate what that is. Yeah,
Well, take it one step further. Now this whole business with the metaverse, where eventually you'll buy, I don't know anything about this, but eventually you'll buy real estate, you know, and I think it was I think it was in your podcast where somebody purchased, you referenced where somebody bought real estate next to a
Snoop Dogg.
That's it.
Yeah.
Okay. Was that? Yeah. So
yeah, that's what it was. Someone paid like $1 million or $2 million. I don't know, some or 500,000. I don't know, some big number.
What does the world come to? I mean, all right. So let's take that example. So let's just make it simple. Let's say you buy land or parcel of digital land, for lack of a better analogy, and you buy that land for $1,000 and $100,000, and you sell that land in the metaverse. And this is very long term. This is not something that's going on now. At least I haven't heard anything. But let's say, and I can just picture the IRS just taking the position where, well, in this, you know, you're in a metaverse, you're in the metaverse, and it's not the real world, but it's a taxable event. I can picture that happening.
100%. I think that's 100% accurate. I mean, because like if you're using a non-US dollar asset, and you're purchasing things inside of this space, then even if you are using the US dollar crypto, like a stable coin, or if we create a CBDC, it's the same thing. It's just the difference is that asset that currency that's being used inside the metaverse has a fluctuating value. And I think that's where it gets messy for me, like keeping track.
And who determines that fluctuation? Like, is there like a market within that metaverse that
so all the coins that are used in the metaverses that are currently being used anyway are listed on multiple stock exchanges, so they have a supply and demand to create the market price, and there's not much arbitrage amongst the market. Some people, big institutional players, can they play the arbitrage between the markets, the exchanges, but basically the market sets the price, and that's verified at the, or that's on the exchanges. But the land, the value of the land is completely different, because the land is an NFT, which means that it's unique, as the same as buying a house or another piece of property. It's like, well, so who sets that price? I have no idea. There are real estate agents that are selling these things, and they're training to buy and sell real estate in the metaverse. So I have no idea how they price these things, but there's a market. They have their own marketplace.
When it comes to currencies, the only cryptocurrencies that I can think of, I'm an 80s man. So Disney dollars, you had tickets at the arcade. Those are one sense, not cryptocurrencies, but they're in a sense some sort of a equal,
Totally.
I guess it's, remember in the arcades, the old classic arcades, you'd get those tickets, and then in exchange you would get.
Yes, 100% yes.
Yeah, and you know, that's what I think of. So just so I can understand this whole crypto business and how it works. Disney dollars, I mean, I don't think they have them anymore, but Disney dollars was another universe with itself.
Well, I always refer to like Starbucks rewards. When you you can purchase, you get rewards, you can purchase things in Starbucks with this form of currency. It's the same thing. Like Disney dollars only have utility within the Disney ecosystem, and they're a form of currency. Although I don't know that you're getting a taxable event if you bought, if there, or maybe if there was a market for them, maybe there would be.
So in one thing that just popped into my head, I think it would be worthy of mentioning this, where if you have real estate within the metaverse and you decide to rent out that property, now they're talking about renting property.
Yeah. Yeah.
So if that's the case, I would make some sort of a bold prediction here, if I may, do so in a humbling manner, obviously. I would project that in the next 5 to 10 years, that the same rules that happen in real life on rental property will equally happen as well as in the metaverse. What does that mean? Yeah, well, it means this. If you have rental income, that is considered passive income for purposes of taxes, which means you're paying a less rate. It also means that approximately maybe 3 months of your rent on average is probably going to be given to you tax-free.
Oh,
through depreciation expenses that you take. So
interesting.
We'll come back to it 5, 10 years from now.
Yeah, that I haven't thought about depreciation of like a rental property in like an income property in the metaverse. Oh man, I'm gonna have to think on that one.
Although there's a big footnote, for purposes of land, depreciation does not count for land. So does it count for crypto land?
Well, okay, so check this out. So you buy the land, and the land basically gives you a certain amount of space to code. So what they'll do, these property developers will buy land, and then they'll design it just like a typical designing of a house with architects and interior designers. And then they'll take those like renderings or those drawings, and they'll give it to a 3D artist who does 3D renderings in like video games, basically like a video game artist, and they'll create it. And and I don't think there's any vertical restrictions, just width and like length. And so they can build these things. So it's like one person's building like an 8-story or 18-story building, and they're gonna lease it out to like Coinbase and there's HSBC just bought some land. PricewaterhouseCoopers, they're talking about, basically throwing marketing events, bringing in like a singer to do a concert, and they can do it on this land in this venue.
So are you saying that the Burj Khalifa, if I decided to have something so tall as that's technically possible? I mean, is that what you're...
And they're talking about how things they can defy gravity, because it's all like your imagination. Like, so as you can build within certain limits of that land, but there are other things that you can defy, physics and gravity and stuff like that. It's pretty interesting. But yeah, I mean, if you have something coded So that's an expense because you're paying somebody to code it and build this great 3D rendering.
Improvements. The key word is improvements. Yes.
Okay. And then it probably will require some sort of upkeep. But I don't know. I'm going to have to do some research on this depreciation. Like, I would assume that as systems constantly are getting updated, the value of your property would depreciate if you're running on like an old software or an older operating, like an older version, like, iOS 2.0, 3.0 or whatever.
Or does depreciation even exist in a
Yeah.
first sense of the term? I mean,
Right.
I still have the classic Nintendo NES system that I still play around with. Uh, it's depreciated in a sense where I have to somehow, you remember, you have to blow on it and then
Yeah.
good
I
old
don't know. That's an interesting
yeah.
question. So I'm just going to change gears real quick before we finish up. What topic in the crypto space do you love or hate the most? What kind of gets you excited or annoyed or whatever?
Folks are, you mention a lot about, at least I hear, and I'm approaching this at a humble manner. I'm not too well versed in Bitcoin implications and all that, but I constantly hear a lot of, I don't want to say noise. I just want to see a lot of people talking about these types of issues where they say they buy Bitcoin because of its decentralized existence.
All right.
To that argument, I would respectfully say, well, are these people that are buying Bitcoin really in to buy Bitcoin because of the fact that it's not a fiat-based currency and the fact that it's decentralized, or are they really in it for a profit because it's just going to the moon? I mean,
Yeah.
I don't think people are doing it for philosophical reasons per se. We have a decentralized currency, because if that were the case, then there would there would be no need for these 1099Bs. Everybody would transition,
Right.
get rid of these fractional reserve banking system, get rid of the whole thing. It just, to me, it's just very unpersuasive at this point. People are in it to put food on the table. People have to pay their rent. People have to pay their mortgage. People have to pay their kids' education. These are, overheads, personal overheads that just are not going to go away. And I just don't think, it's decentralized. I just don't buy that part.
I really appreciate that point because I don't think that anybody in the crypto space should hide behind any sort of like righteousness. I think that we should own the fact that, there's a lot of people trying to make money off of this, especially when you hear about all these people becoming millionaires and like 10,000% returns. And
good for them. Good for them.
Yeah.
That's what the United States is about. If you can, the American dream, making money, that's great.
Yeah.
But come to me and say, well, it's a decentral. I mean, there's nothing wrong. There are problems with the fractional reserve system that we have now, the Fed system and the central planning. But we also have to realize that in the past 100 years or so, there have been more millionaires in the United States than any time in recorded history. I mean, that's quite a statement. Now, there's a lot of polarization in society, and unfortunately, our politicians have not been able to tackle those issues yet. And hopefully through time.
Yeah, so I would like to just kind of expand a little bit. Like personally, what I've seen is in talking to people behind the chair about it, and talking to friends and family, and being like kind of having dove down the rabbit hole and not being able to, or interested in coming out. I've found that a lot of people find themselves like, okay, for instance, I found myself into crypto for the purpose, the libertarian, anti-bank, anti-government, something that the government can control. And I don't have a lot of trust in the government. I don't have any trust in like, Wall Street bankers. Like I'm a millennial, and I lost I'm an old millennial, but I lost everything when 2008 collapsed. I lost everything, and I hit a bottom that and I wanted to figure out what would happen. So I started doing my research. I went to school and studied business and minored in finance, and I wanted to understand what happened. And what I saw was that basically people were making money by selling by on the backs of, like, okay, actually, let's not say this because that's a blame game. What I saw, which is a fact, I saw Americans across this country living in tent cities while people on Wall Street were getting these parachute bonuses and like getting to walk out. And only one firm went under. Nobody, there was no jail. Not that saying that anybody should have gone to jail. I'm just saying there was a vast inequality between what Main Street and Wall Street. So like, that's why I got into it, because I'm like, well, I want to own an asset that they don't control and that's outside of their system, because and then I also see like massive inflation and like debasement of the currency. And I just don't think it's sustainable. And that's been a narrative of me growing up. And, my dad is like he's like Q curious and kind of a Trumper a little bit. And not really anymore. He's probably going to watch this. And, but, he did teach me to like not be weary of the government. So I got into it for all these libertarian ideas, but that's not why I'm here anymore. Like, and I do want to make money. I'm not going to lie about that. But the reason why I'm in it is because I believe, and like, I think the libertarian argument is actually the argument that will cause the governments to go against it, which will mean that no one will make any money. Unless society collapses, but then you still need the internet and energy. So it's not going to be useful unless society adopts it at some level. That's my opinion. So I'm in it because this is the first time in history that a normal common person has an advantage to invest in an up and coming technology in an emerging market before the banks, because there's so much regulation and they just can't get it. Goldman Sachs just now is offering trading in crypto through options. They had to go through all these loopholes to get around the regulations. There's all these accounting practices. They can't keep these types. They're considered collectibles and you can't write the values up and down. And it's like all these rules that prevent banks from holding them on their balance sheets and all these capital requirements. Like they want to get into it. Customers want it. They're seeing billions of dollars leaving their balance sheet to go into these crypto companies. And I want to be in early, and I think it's still early. So that's why I'm in it. I'm in it because I can get ahead of the big money. And I do believe that it'll be adopted. I think the only reason it won't is because of the libertarian, anti-bank, anti-government. And I'm not against that argument. I'm just saying that's the biggest risk, in my opinion, of the entire space. And I also believe in the technology. Like, I'm really into tech. I want to be able to trade my Starbucks rewards for Delta Sky Miles. I don't want Audible telling me that my Audible credits expire at the end of the month because I had a subscription. I was like, what the heck? What do you mean? I paid for those things. I like that kind of stuff is why I like the tech and I like the first mover advantage. So that's why I'm into it. But there are a lot of people that do get into it for the libertarian reasons, and they preach these concepts and they buy and they hold and they just constantly accumulate. And I see a lot of.
What percent? I don't know if a statistic would even exist for this, but what percent would go into it for those libertarian reasons that you mentioned?
I think the libertarian side. So there's.
I don't know if that's possible to even measure. I mean,
I don't think so. I could guess based on anecdotal data, and I would say that 20%, but there's I would say like 40+% or more. Yeah, probably quite a bit more is in it because due to scarcity for Bitcoin and the fact that there is debasement, massive inflation. Inflation is finally being admitted that it's real, it's here, and it's a threat. You got Jerome Powell, head of Fed, saying he's willing to go what Volcker did, and he raised the rates up 15-20% or whatever it was. So like when you hear that kind of stuff, you're starting to see like institutions and wealthy investors coming out saying, I'm buying, and they're buying. So I think most people are buying for inflation. But I do think maybe 20% are in it for libertarian purposes.
What is the actual supply? I mean, this inflation, deflation of debasement is another thing. I mean, it would equally apply to Bitcoin because there's only a certain amount of supply. I think you said 20 million, and then you said in one of your
21 million, yeah.
21 million, and that's it.
Yeah,
Is
that's
there
it.
I mean, who decides on that planning of there's only going to be 20 million Bitcoin and that's it? There has to be a decision maker there.
The creator of Bitcoin, Satoshi Nakamoto, is either a person or a group of people who created it anonymously, and they started mining it through the proof of work protocols. And the first million is sitting in a wallet. No one has claimed that million Bitcoin yet. It could happen one day. Hopefully it never happens. How amazing would that be? But they said what they decided, and the white paper explains this. He said that it has a fixed supply, so it's better than gold because gold is inflated. You know, when gold price goes up, miners go dig more and pull more gold out, which causes the price to go back down. And there is potentially an endless supply of gold. We don't actually know how much gold there is to be mined. So it is 21 million to 8 decimal points. So it's a large, it can be denominated down into 8 decimal points. So it's a lot larger than 21 million. But the answer to your question is that decision can only be changed because of the way the blockchain was programmed if 91% of all the miners agree to change it. It requires 91% of all miners, which is
so there's a democratic vote to it.
Yeah, but not 91% majority. So that's the concern about, like, that's maybe a topic for another time. But yeah, 91% of the miners, the people who are processing these transactions, they all have, someone has to put up a vote into like, there's like a dashboard or a platform where you can put a vote up, and the miners can come on and they can like link up and say, hey, we vote yes or we vote no. So proposals are made all the time on all these different blockchains, and each blockchain has its own consensus protocols and requires whatever is programmed. Each one has its own.
So there is democracy involved. That's good. Democracy is good.
Yeah, I agree. Yeah. Well, is there any last points or any last statements or comments you'd like to share before we wrap it up?
I just the other day, I think it was one of Musk's, maybe this is an old conspiracy theory where Satoshi Nakamoto, was it Samsung, Toshiba? That was pretty cool. I guess the prefixes and suffixes of Samsung, Toshiba, Nakamichi, and then Motorola, I think it was.
Oh, I didn't hear that. No, I don't know.
Yeah. The prefixes and suffixes used for those names, those 4 businesses, conspiratorial. Yeah,
maybe.
I don't know, but it did. Musk, I think, tweeted it the other day. I think it was last month or so. Samsung, Toshiba, Nakamichi, and Motorola.
Huh. Yeah, that sounds right. I wonder who that is. I have no idea. There's a guy, Craig Wright, who won some lawsuit case that people are saying that proves that he's Satoshi Nakamoto and he created with somebody else, and they're arguing over the IP of something. And but guess what? He hasn't opened that wallet. So no one is Satoshi Nakamoto until they open that 1 million Bitcoin wallet.
That's right.
Yeah. And when that happens, price will probably collapse.
Really?
Yeah. Yeah, I mean, I don't think it'll be good if they start unloading it, unless they unload it slowly. But I think that's one of the largest risks of Bitcoin, is that Satoshi Nakamoto reveals themselves and all of a sudden has 1 million Bitcoin. I mean, that's a massive amount of money.
Probably that fellow that died a couple of years ago. His name escapes me.
It might be the Craig Wright's partner guy, because the family was suing Craig Wright for stealing something. I don't really know the full story, but I'm waiting for someone to open that wallet. Until then, I don't care. Yeah. But
Very
anyway,
nice.
it's a mystery. And I think if Bitcoin continues to be adopted, it's going to be one of those things that people make movies about. There's an entire industry around trying to find out who that person is.
Matter of time.
Yeah, matter of time. Well, thank you so much for coming on the show. I really appreciate it. It's awesome to get a professional's advice, especially in the world of taxes around tax time. So if anybody wants to reach out to Kemal, you can just use the information in the description below, or you can shoot me a message depending on what platform you're on, and we'll connect you. If you have any comments or questions, please leave a comment below. If you're listening on podcast, please give me 5 stars and follow me. If you're watching on YouTube, please smash the subscribe, ring the bell, help support the channel, and it doesn't cost you anything. Thanks again, man.
Take care now.
All right, take care.